Hi there, and welcome to this video on the underwriting process in a real estate transaction. Whether you're a buyer or a seller, it's important to understand what underwriting is and how it works in order to have a successful real estate transaction. In this video, I'll be explaining the underwriting process in detail and what to expect. Before we get started, be sure you give this video a like and subscribe to the Barton Realty channel to keep up with all things real estate. In simple terms, underwriting is the process by which a lender evaluates a borrower's financial situation and assesses their ability to repay a loan. In the context of a real estate transaction, underwriting usually refers to the process of evaluating a borrower's mortgage application. If you're a buyer, the underwriting process begins after you've filled out a mortgage application and submitted it to a lender. The lender will typically review your application, verify the information you've provided, such as your credit score and credit history, income and employment information, assets and debts, and the property you're buying. They will also order an appraisal of the property to ensure that it's worth the amount you're seeking to borrow. The lender will use all of this information to make a decision on whether to approve your mortgage application, and if so, how much to lend you, and at what interest rate. The underwriting process can take some time, depending on the lender and the complexity of your application. And you may be asked to provide additional documentation or answer questions to help the lender make a decision. Some mortgage lenders now offer upfront underwriting, which means you can get pre-approved before you even make an offer on a home. This can give you a major advantage in a competitive market. With upfront underwriting, a lender will review your financial documents and credit history to determine how much they can lend you. They'll also look at the home's estimated value and condition to make sure it meets their lending requirements. This means that when you do make an offer on a home, the only thing left to review and approve is the condition of the home in terms of the loan requirements. This process can save you a lot of time and stress, and it can also make you a more attractive buyer to sellers. One key aspect of the underwriting process is the debt-to-income (DTI) ratio, which compares a borrower's monthly debt payments to their gross monthly income. Lenders typically prefer a DTI ratio of 43% or less, although some may be willing to consider higher ratios in certain cases. In some cases, the lender may require additional documentation or information during the underwriting process, such as proof of employment or additional financial statements. It's important to respond promptly to these requests to avoid delays or potential denial of the mortgage application. The underwriting process typically involves a team of professionals, including underwriters, loan processors, and other support staff. These professionals work together to ensure that the mortgage application is thoroughly evaluated and that all necessary information is collected. Finally, it's important to note that the underwriting process is designed to protect both the borrower and the lender. By carefully evaluating the borrower's financial situation and ability to repay the loan, the lender can minimize their risk and ensure that the borrower is not taking on more debt than they can handle. So that's a brief overview of the underwriting process in a real estate transaction. Whether you're a buyer or a seller, and be prepared to provide all necessary documentation and information in order to increase your chances of a successful mortgage application and a smooth real estate transaction. Thanks for watching. If you liked this video, be sure you give it a like and subscribe to the Barton Realty channel for more great real estate content.